Geopolitical risks have a very limited impact on commodity prices, and we need to understand why. What really matters for commodity prices is whether marginal demand is coming up faster than expected, and the monetary element, quantity of money and the cost of money. Marginal demand coming from Asia, in particular China, is growing, but it's not growing as fast as was expected. Therefore, a lower element of marginal demand makes the price of commodities remain relatively subdued. The monetary aspect is even more important and more interesting, is that when the amount of money in the system is coming down and rates are rising, commodities rarely go up for a very simple reason. It is much more expensive to store or to hire rates or freight rates or to get in long positions. But it's also very important to understand that lower quantity of money has a stronger impact on the curve going forward. That doesn't mean that there is no geopolitical risk. All the things that we are seeing these days in the news are creating a floor on commodity prices. And this is important, then we need to understand why it has an impact, because in 2023, falling commodity prices have certainly helped the GDP of the euro area in particular, but also of the United States. The external sector has been improving thanks to lower imports. But as geopolitical risks create a floor on commodity prices, and at the same time we have a lower element of risk coming from rate hikes and money contraction, it is very likely that we may see some element of problematic impact of imports in GDP in 2024. The lower rates that everybody is expecting environment is going to certainly create a different environment than in 2023, i.e., geopolitical risks create a floor on commodities, while monetary contraction and rate hikes create a negative impact on commodity prices. Marginal demand is weaker, and that also creates a negative impact on commodity prices. But all of those effects are behind us. In front of us, we might see a recovery of marginal demand, rate cuts, monetary expansion, and the floor of geopolitical risks remaining. Therefore, that is an environment that is quite different from the one that we saw in 2023. And we need to monitor it because it may create the opposite effect on GDP of the developed nations.